On to business news now. Stanbic Bank Holdings has announced a 12.2 billion shilling profit after tax and a total of dividend payout equivalent to 50% of its earnings for the financial year ended December 31, 2023. The financial services provider with operations in Kenya and South Sudan attributed the 34% year-on-year growth to improved net interest margins, balance sheet growth and strong trading revenue. Stanbic Bank Kenya and South Sudan Chief Executive Joshua Oigara said the results reflect the bank's resilience amidst a tough operating environment. Elias Wanjiru with more details.
According to the Chief Executive of Stanbic Bank Kenya and South Sudan, Dr. Joshua Oigara, the Nairobi Securities Exchange listed lender saw its net interest income grow by 35% to Kenya shillings 25.6 billion in the 2023 financial year, driven by healthy balance sheet growth and expansion in margins on its interest earning assets. Customer deposit rose by 18% to Kenya shilling 321 billion, while loans and advances increased by 10% to Kenya shillings 261 billion, underscoring the bank's commitment to growth of its customer franchise.
Our belief that our ambition and positioning for a brand is very solid, rests on a very strong, the platform is very, very solid today. So we are not changing that. Our clients remain at the heart of our delivery. So we'll continue to see growth in terms of our revenues, enhance our NPS score. Those two catalyzes our ambition to grow our clients' profiles. We will continue to enhance efficiency for us. So cost-to-income ratio, despite the headwinds that you see, the depreciation of the currency, we will see ourselves remaining at, so you can see we are pushing it down to 41%. I mean, that 200 bips reduction is much more ambitious than reduction from 50 to 44. And then if you look at our efficiency in terms of our loss ratios and the return to equities into the quarters to 23-25%. So that tells you about what are the kind of neighborhoods for performance in the horizon for the next 3 years.
Stanbic Region Chief Executive Patrick Moheira said they are supporting Kenya and South Sudan transition to a low-carbon economy, and to end this, the bank was part of a consortium of financial institutions that provided funding of Kenya shillings 15 billion sustainability-linked loan facility (SLL) to one of its clients. The deal also paves the way for further sustainability financing in the region as companies seek to become more accountable for their ESG reporting and financing.
We continue to deliver double-digit growth in profits after tax. In fact, we're the fastest growing bank in the industry for now. We attained #1 equity broker by market share last year. We have a consistent dividend payout, which is significant. We paid out 50 to 60% of our earnings, and still growing the shareholder value. Our shareholder remains quite committed to Africa. Africa Regions has become a significant part of our bank, and East Africa remains a key part of that strategy.
The bank's Chief Financial and Value Officer, Dennis Musau, noted that the bank's previous 3-year strategy delivered the envisioned goal of sustainable growth trajectory with all the key metrics depicting better returns. He added that over 500 micro, small and medium enterprises (MSMEs) received catalytic funds and grants.
Our revenue went up 29% to 41.3 billion off of 32.1 in 2022. Our revenue has two broad categories: net interest income and non-interest revenue. Net interest income is your interest income on loans. That number went up, so net interest income went up 35%, non-interest revenue went up 19% in the year. Went up 45%. Interest expense on account of rising cost of funding went up 72%. That gives us a profitability growth year-on-year of 34% at 12.2 billion, an ROE of 18.6%, up 330 basis points, earning per share at 30.75 shillings.
Reporting for Hope TV News Watch, my name is Elias Wanjiru.